Hi, I'm Matt, the owner of HomeSure Lending, and we're going to talk about the least fun part of getting a mortgage, the interest rate. A lot of times we get the question, how are interest rates determined? Well, they're determined a couple levels above us, really, with how the stock market and the bond market perform. And that's something that's really out of our control. If rates are rising on a national level, it's not anything that we can do anything about. And really, it doesn't help us as a business to have to sell higher interest rates. One of the things we can control when it comes to interest rates is how much we're trying to make. We could charge processing, application, underwriting fees, and honestly, we just choose not to do those. We think they're a disingenuous way of making extra money. A lot of times when you see companies advertise really low interest rates, you're going to want to look at the fees. Origination charges, processing, application, and underwriting fees. There's times where we look at offers from other companies that are, quite frankly, $2,500 of cost higher to save $5 or $10 a month of interest. That just doesn't make a whole lot of sense. What we try to do is give you an offer that makes sense from a cost perspective and a long-term interest perspective. So you can pay points to lower your interest rate. And a lot of places, like I said, have lower rates because they're charging fees up front. But let's say you're going to spend $500 to save $5 a month. Well, that's a 100-month break even. You're looking at 8.5 years before you break even on that, and the average person right now holds a mortgage for 5 years. It just doesn't make a whole lot of sense to take that cash out of your pocket up front. What we want to make sure of is that there's a great combination of rate and fee, that those match up, and at the end of the day, you're happy with what you're getting. So another question we commonly get is, what factors influence my interest rate? Well, there's a lot. There's your credit score. That's the biggest factor. If your credit score is really good, you're going to get the best rate. Interestingly, loan size is actually a big one. So if you're borrowing $250,000, you're going to get a better rate than if you're borrowing $50,000. And if you think about it, this money isn't ours. It's these wholesale investors who have billions of dollars in the bank. And if they're going to lend $250,000, it's much lower risk to lend it to one person than five. So five $50,000 loans price a lot worse and make a lot more interest for them than one $250,000 loan from a risk standpoint. That one $250,000 loan is less risky. Another main factor is your program type. FHA loans, conventional loans, USDA, VA loans, there's all sorts of options with higher and lower rates, how the mortgage insurance works. Actually, mortgage insurance is another video you can watch if you want to understand what mortgage insurance or PMI is at homesurelending.com/FAQ. But there are tons of factors just based on the type of loan program you're choosing, and we'll help you pick the right one. We get asked often, what is a rate lock? Well, a rate lock is where we lock a rate in for a certain amount of days. So if you're refinancing, we don't need more than 30 days generally to get that done. If you're buying a house, sometimes real estate agents write contracts for 45, even if we tell them shorter. We don't need 45 days. That's a thing of the past. Industry average is 45 days, ours is 25. It just doesn't make sense to lock on a long term, and here's why. A 30-day rate lock is cheaper than a 45-day rate lock. It's going to save you money to lock that rate in for a shorter term. Now for 30 days, why am I locked in and what does that do? Well, really what it does is protect you from the market getting worse. So let's say rates start shooting up and you've locked in, well, you're set. You don't have to worry. As long as we close within those 30 days, we're good. What that comes back to is making sure we work as a team. So if we need documents from you or something to get the loan done, it's on all of us to get that done. So we set due dates for documents we need from you. We also set due dates internally. And if we have 25 days to get a loan done, we're shooting for 15. We're not shooting for the day before. There's a whole lot more to rates than just that. It's the most complicated part of what we do. So it's really something that you'll want to get in contact with us about. So feel free to send us an email. Our goal, as always, is to help you purchase with confidence and refinance with ease.